Welcome to Coffee with Closers. On this episode, we have a very special guest. Her name is Amanda Mendez. Her first 9 months in the business, she closed $6 million in sales volume. Her first year, she's closing in on $12 million worth of sales volume. So in this episode, we're going to go through her journey of how she got started, all the challenges she faced, and some of the things she's doing to be able to generate this much volume as a new loan officer. So let's dive right into the video. Welcome to Coffee with Closers. In this series, we interview top real estate producers that are out there making big things happen in the real estate industry. That way you can learn from their failures and their big wins so you can start winning more in your real estate business. So Amanda, welcome to the show.
Thank you. Thank you. I'm excited to be here.
Of course, of course. So Amanda, tell us a little bit more about your first 12 months in mortgages. You have done tremendous. You've closed $10 million in sales, which is quite unusual for a brand new loan officer. So in this episode, I was kind of hoping to dig deeper, learn a little bit more about your story, and then kind of figure out how you've managed to do so well, so quickly for anybody out there that's looking to get into this business doing mortgages or any kind of real estate entrepreneurship. So let's dive into, kind of where you were at to begin with, and what you were doing before mortgages, before you started this whole thing.
Yeah. So life before mortgages, because it definitely has been a great 12 months. And a lot of it definitely started with a lot of foundation I had from my career prior to. A little different. It was also dealing with people and dealing with numbers and sales, but I was actually in the cosmetology industry. And I was actually an academy director of an accredited, well-known, pretty brand name cosmetology school. So I'm a hairdresser by trade. When you look at like my education and my schooling, I'm a hairdresser, but I fell in love with helping other hairdressers grow. And that's how I landed myself in the school setting for most of my career. I was with the industry for about 10 years, and 7 of it was actually in the education setting. So I dealt with overseeing admissions. I dealt with the education and facilitation of the schooling. So essentially, easy way to say it, I was a principal of a beauty school. But it definitely gave me a lot of experience with customer service and people. And also we were a school with admission. So we were focused on sales and, getting that conversion rates and dealing with that lead flow, et cetera.
Okay, so you were pretty familiar with the sales process and things like that before you dived into mortgage.
Yeah. Yeah, it definitely was. I was speaking on something I was very near and dear to my heart, the beauty industry specifically. But it definitely was something that I focused on, how many tours we were taking to convert it to how many people enrolled, and then from enrollment to graduation, et cetera.
That makes sense. Okay. So what made you have interest and think about getting into mortgages?
So it actually started with a second passion of mine, is that I became a homeowner when I was actually working at the school. So I had a set salary income, and I wanted to become my own owner of my own real estate and start a portfolio. So I purchased a 2-family home and went through that process, but I didn't, I went through all the new homeowner trials. So I had to work on my credit, had to save a down payment. Also became a landlord, so I had to kind of navigate that. So I did that, and then realized how much I loved it and how much I was guided in the process. Actually, I had a great loan officer that guided me through, explained everything, because I had a familiar background a little bit, but my family, actually, my mother did mortgages when I was growing up in my teens, so like semi-familiar, but not to doing it on my own. So when I became a homeowner, I was like, I loved it. And I realized that it's something that is such a blessing to have in your life if you get the opportunity to do that. So when I wanted to go into something else, I said, okay, what's my second thing that I love in my life? And it's real estate.
That's awesome. Okay. So you decided to get out of the beauty industry, dive into the loan officer business. But essentially, like before you did that, did you start part-time, or were you kind of like part-time while you were getting your license? How did that look?
Yeah. So, I mean, I definitely dove in. I did a little bit of on the weekends at my prior career, because I needed to like stay afloat and make sure I had some kind of base. But I did go into this having a full-time mindset. I didn't want to not give all of my attention to what I was trying to make as a very full and profitable and be successful at this. So I wanted to give it its full attention that it deserved. So I went in and left my Monday through Friday and replaced it with this industry as well. I was very thankful that I had that investment property initially, because that really helped me make sure I made the transition monetarily and financially wise in my own life. And again, another reason why I was getting into real estate, because I seen how much that helped me be able to change careers that way. But I did go into it full time.
That's awesome. Okay. And now how hard is it to actually get started, like getting licensed, going through the education portion and actually passing the exam?
Yeah, it doesn't actually take much. It's similar to real estate. If anyone's looking up the differences between the two of them, it's a series of courses. You have to take 20 hours of not continuing ed, but education really. You can take it in person or online. I wanted to get into this as soon as possible. Once I make a decision on something, I just like to dive right in. So I chose to do mine online. In person would have been great just to how I learned, but usually it depends on the state, but our state specifically, the state that I'm in, it was a 6-month wait to be able to get in those classes. So I also wanted to be able to do it on my own free time. So I took the 20 hours online. And then you want to look into if you're going to be licensed in just your state or one specific state or multiple states. In mortgages, the way our test works is that we have one universal uniform test that licenses us as lenders. And then you take an additional X amount of hours per state and then do an application per state to get licensed in individual states. So the big meat and potatoes is a 20-hour universal course. And then for myself, I'm based out of Rhode Island. So I took the X amount of hours for Rhode Island and then did the application there. And then I also, Massachusetts is right next door to us. And my prior career was in Massachusetts. So I wanted to get licensed there as well for any sphere of influence clients I had. So I also took the required hours from Massachusetts, did their application as well too.
Awesome. Okay. Now there are a lot of people on this channel that are kind of bouncing back and forth between, going the real estate license route, being a realtor or getting into mortgages. So when you started this whole process, did you look at both and kind of compare the pros and cons? And if so, like what things did you kind of discover through that process?
Yeah, I didn't actually look at it for myself. I think like I mentioned, my mom did mortgages. So when it came to real estate, I naturally had a little more bias to lean towards mortgages because I understood it because I grew up in it. But a lot of my friends and family or people that I told that I was changing career paths asked me if I was going to become an agent or why didn't I become an agent? And they would actually ask the question of like, who's the loan officer? What do they do? They don't think about it usually in the purchasing a home transaction. So I entertained it for maybe half a second, but I knew myself. So I think the biggest question, what made me decide to stick to the mortgage route that I intended on was that I know how I am and what my interests are. My interests are more finance and helping people be educated in something that's not really talked about a lot, which is understanding how you financially set yourself up for success of owning a home. A lot of the times it's go right into looking at the houses, how many rooms, how many bathrooms, what the design is, all the details of how the house looks, but not about how am I going to be able to make this mortgage payment and who says how much of a house I can buy. So I wanted to educate people on something like that because I believed in it. And then also the ability and how much wealth it brings you afterwards. So I definitely want to tap into the mortgages side of more of the transaction because that's where my niche is. I also like puzzles and I like to structure and make things work and problem solve, and structuring is exactly what we do. We deal with clients and we take applications and we look at documents and we help them with credit, but figuring out what loan program is best for them. There's many options out there for homeowners. That's what I love to do. So problem solving, numbers, wealth gaining, and then dealing with people as well too. So that's why mortgages fit for me.
That makes sense. Okay. All right. So did you see any like similarities between the two, or in your opinion, are they just like totally different things throughout the day-to-day process? What should people expect if they were going to be a loan officer compared to a realtor?
Yeah. I see it on a day-to-day, like when I interact with my partner. So the people I interact with the most outside of my own mortgage fellow loan officers in my company are my realtor partners. And those are agents out there on the field. I give a lot of credit as an agent. You are definitely more of the frontline point of contact for the client and you're the negotiator keeping everything together between, you're the person that usually people think of first. So you are like the number one go-to source and support for the client. And then your also job is to refer out and recommend a excellent lender to work with, then an excellent title company to work with, and then a home inspector to work with. So if you're someone, I think when you think about deciding between the two of them, if you're someone that likes to help gather all the parties together and make sure everything is going smooth and be a good negotiator and make sure everyone's happy, and you have that skill set, that's all I see my partners do and do very well at. So that's the number one difference. As a loan officer, you're still dealing with the client just as much, for sure, but you're kind of a little bit more behind the curtain than the realtor is going to be, in my perception.
Okay, that makes sense. So maybe for someone a little bit more introverted that wants to get, partners that are going to give them, consistent business. They don't want to chase every single deal around. Maybe someone that wants to be in the office a little bit more rather than, driving around on the weekend, showing houses, things like that, right?
Yeah. I mean, as a new loan officer, you're going to want to be out there just as much with your partners so that you're constantly staying top of mind to partners. So it's not to say that you're not out there. I mean, I do open houses on the weekends with partners, but if you are someone that likes to be a little bit more behind the curtain and behind the scenes and how the money and the financial part of the transaction works, a loan officer is more of a fit for you.
Okay, that makes sense. So I'd assume that getting to this, I know your numbers are great. You did awesome your first year, but I'm sure that came with some challenges. So what challenges did you run into when you were kind of building your business and getting it off the ground?
Challenges came with definitely getting out there and getting known in the industry and building the trust within the industry and with partners.
Mhm.
A lot of every loan officer has their own percentage of purchase to refinance base. In the current market we're in right now, refinances aren't talked about too much unless they have a need to either pull equity out of the home, or maybe something that's happening within a family. But my volume has, in my beginning half of my career, mostly been purchases. So I'm going towards meeting clients that are looking for homes, meeting partners that have clients that are looking for homes. So getting out there and making sure that I am letting everyone know I do mortgages and that they can trust me in the transaction to get to the closing table, was one of the biggest thing that definitely was like, it was the number one thing I had to focus on, and it wasn't a crazy hurdle, but it takes consistency in doing that to and focusing on that to be successful. So that was the biggest thing.
That makes sense. So kind of just getting known, becoming the person that realtors, reach out to when they have a client,
Yeah.
that kind of thing there. So what things would you do if you were starting over again to get your first sale?
What I would do over again is that in the beginning a little bit, I did kind of hesitate from getting right out there because I felt like I had to know everything. There is a lot of guidelines when it comes to mortgages, and you're dealing with, Fannie Mae, Freddie Mac, and honestly stuff that they don't really teach you too much in the test part of things. They teach you all the laws. I would assume, much like real estate, they teach you what you should and shouldn't do to make sure that you're an ethical and legal person.
Mhm.
They don't focus too much on structuring and what qualifying, what doesn't, what type of, how much income, or all the little nuances of the guidelines, because they're always changing as well too. So at first I felt like I needed to know everything, and it was like, I can't take an application or talk to someone until I know exactly what I'm talking about. And it kind of held me back a little bit when I then realized that I needed to get the experience of getting an application, working through it, learning it. And as I do it, it sticks a lot better. And I became, with every transaction, no two transactions are alike ever. So you learn as you go through them. If you're focused on wanting to know everything right away and not do any transactions, you're not getting the experience you need to kind of like actually dive in and digest it and work through it.
Okay. So that makes sense. But like as far as actually getting the deal, so would you suggest going to an office that provides leads? Would you suggest asking, realtors for coffee?
Yeah.
meeting up at like BNI groups? What would be the best way to go about that? Just to get your first deal, get the ball rolling, and kind of get your business off the ground.
Yeah. Networking events was huge. That was my biggest one that definitely got me out there to a variety of people. And it also got me recognized and being like, oh, yeah, I seen you at that event. Or, oh, yeah, I recognize you from there. I leaned into networking events and social media a lot. And those really helped me because they didn't see me face to face at a networking event. They see me consistently posting on my social media pages, and getting my face out there with either content videos or sharing what open house I was helping a partner at over the weekend, or spotlighting a program, a loan program, just getting out any type of education. That was definitely, that's the number one thing to make sure you're always doing, because you can't be afraid. You can't sit back and wait for it to come to you, and you can't be afraid to ask for it either. Um, we're all here to help people, and unless you ask, people, like ask for either the referral or for how you can help, you're not going to be able to make the connection if you're waiting for people to kind of reach out to you.
That's huge. So as far as like reaching out to real estate agents, I know this is a big hang up that a lot of, lenders have and loan officers, because I have videos on the channel talking about how to do that. And it's some of the most popular content on the channel. So what would you say as a lender, reaching out to realtors? Like, how do you go about that? What should you do about the realtors that just kind of blow you off? What's the mindset that you have to be able to have success in, building relationships with those partners from a cold approach standpoint?
Yeah. Mindset, don't be afraid to hear no, or hear I have a preferred lender already. A lot of realtors already have relationships built and embedded in their business already that they trust and they refer, and that is okay. You're going to become that preferred lender to some realtor. It might not be that realtor that you're on the phone with initially. And no matter what, you at least made the call and did the practice of it. Because even if it's a call that I made to a realtor and they're not willing to meet me for coffee, or because they have their set people, it was still practice for me. It was still practice of getting on the phone call. How did I handle the phone call? What did I initially say? How did I lead the conversation? So don't be afraid of the no, for sure. And then as I was doing it more and more, I started to discover what my people were going to be. What are the avatar partners I'm going to work with, and not just real estate agents as well too. And that's where the channel is, but it might be for a loan officer, it might be a financial advisor, it might be an insurance agent, might be another a title attorney. It could be another loan officer that has programs that you don't have, and then you have programs that they don't have. So when you're reaching out to any partner specifically, definitely still just be willing to hear, anything that they're willing to say, if it's a no, if it's a yes, and then take it as practice and take it as, okay, I'm just learning more and more about the type of people that I'm going to create my community of.
That makes sense. Now, when you're doing this, do you have a CRM that you use to manage the relationships and just keep track of what stage you're at with each individual, vendor? Or are you kind of just keeping a Google sheet and just keeping track of how many times you met with the person? When's the last time you followed up? Is there any system that you follow to be able to stay on top of things?
Yeah. I started very basic in the beginning with Google Sheets. I had a whole list of all realtors to call, and as I called them, I kind of actually highlighted them as if the call, with red, if the call went absolutely like awkward and bad and or was a no. If it was something that was a nurture and I felt like I had a good conversation, and maybe I'll keep staying on top of them, that was like a yellow one, and that was just my color code because I saw like a yellow light that, not ready full throttle yet, but eventually I'll nurture the relationship. Maybe they were yellow, and then at some point I nurtured it and maintained the relationship enough that they actually sent me a referral. I would change it to green. And my goal was visually get as many green lines as I possibly could and get as many partners that sent me referrals. And then also I continued the relationship from there. So I started really, really basic that way. And then I moved to a CRM where I stay top of mind because, as I was making those reach outs, I didn't want to forget about the ones I did say like 2 weeks prior to that. So I wanted to send them weekly updates on education or the programs that my company offers. So keeping a CRM like that is important to do. Just think about yourself like you get busy throughout the day. I definitely forget about what insurance agents reaching out to me or title attorneys reaching out to me as I get busy in my stuff. So you want to have that same mindset that that's going to have same thing is going to happen to them. And you want to just have some type of automated system that stays top of mind to them.
That's great. So from a value add standpoint, I know loan officers are always wondering like what kind of value should it be adding? What are realtors looking for? In your experience, what do realtors want out of a lender partner? And like how do you showcase that so that you can make that connection and start getting, building business together?
Yeah. There's a couple of different ways. I think that you gotta think about where the realtor's at as well too, because I've met a bunch of different realtors that are either in the very beginning stages of their careers or they're established and they have a clientele, and those two different types of realtors are going to have two different needs. So first assess where they are and where they need the support. If they're a new starting agent that just got going, maybe they need marketing help and they're trying to build their own content and they want a lender partner to speak on that. So that might be doing co-branding of flyers if they're comfortable on video, doing some videos together on Q&A questions. It might be doing some co-branded mailers to a specific area that they're trying to farm. Maybe that's more of a in the middle, not completely new, but working up to being a stronger agent that is trying to get maybe more listings in farm a specific area. That might be something co-branding to help them farm and get some listings, because as a loan officer, listings, that's the sale for the realtor. Doesn't necessarily mean that that's no good for you, because you would think like no one's buying, but if you're selling, you're most likely buying the next purchase. So it can still help them. So you can still bring value to them to help them get a listing, but it doesn't mean that you're cut out of the picture because, it's not a buyer per se. So that might be another value add co-marketing. It might just be more of a seasoned agent that their value add is they want to stay top of mind to the different programs as the market's changing. So education, support, or sometimes it's just as simple as communication is like the number one thing that they're most passionate about.
Okay, that makes sense. That makes a lot of sense. So when you're picking, so I'd imagine when you first get your license, you have to find a place to go, do loans, do mortgages, and become a part of a team or an office. What tips would you give to someone that's just getting their license now on finding that perfect fit? Like what things would you look for if you were doing it all over again?
The number one thing to look for is the support you're going to get, in my opinion. As a new loan officer, and it's definitely makes a difference to when you do have a support system around you that's going to be able to answer your questions when you're getting a question from a client or a realtor themselves and you maybe don't know the answer, but you want to be able to get the answer to them quickly. You need to have your support system behind you, whether that's a senior loan officer, whether that's a branch manager, maybe your processes and underwriters are great team support as well too for you. So support and how your company works is huge to me. I didn't realize it, how much of a support system I had getting into it. I actually got into my company that I'm at now, and I've been at the same one since I started my career. I've been very lucky to say I haven't needed to switch for anything. But I didn't even realize how much support they were going to be for me. I just actually went with the company because my loan officer that helped me buy my first purchase was who now is my senior loan officer. So she actually was the one who kind of got me started and got me encouraged into it. I trusted her to buy my home, and I was trusting her to educate me in this new career path, and they have. So I didn't think it was going to be that important. I just thought I had to like know everything, and then I get my first application and go from there. But as I started to take those applications and had those deals under contract, knowing that they were able to answer a call, I could send them an email at any hour of the night or they answered, and that's huge. And also to not just your fellow branch managers or senior loan officers, but your whole processing team as well. Because once you have a transaction, it's not just in your, depends on how the company works, but usually it's not just in your hands completely. You have processing, you have underwriting. And if you work for a company that you have either something maybe in-house or people that are, you're able to communicate with them, it makes it more support for you. And therefore you're more confident when you're talking to your partners and your clients.
That makes sense. Okay. So basically choosing an office has a pretty big impact on, your success level, just starting off as a brand new loan officer.
Definitely. Yeah, I definitely would say so. I've been very lucky with mine. I have good relationships with other loan officers that have been at other different places. And there's some nuggets that I take from them that are good that they're learning. And then there's other things that they're like, hey, uh, they've asked me, like, how do I get that support, or what, how do I know this or be able to provide this to them? So I've definitely seen it either from other loan officers or just see it in my own transactions that I feel confident where I am and the team that's back behind me. And it makes a difference when I showcase it to partners or clients that I work with.
Yeah, that makes total sense. So as a loan officer, like day to day, should people just getting licensed, getting started, should they expect to come into the office on a regular basis, or is it kind of like a work from home kind of thing? What's your take on that?
It's varies. It definitely is. I think it's more common to be more of a work from home or travel and on the go. I currently write out of a small state, so I am traveling a lot, whether it's to another real estate office or maybe to do an open house. And I feel like getting out of four walls gets yourself seen more and stays top of mind as well. But it is important on this side of the transaction, as far as like the home purchase and as a loan officer, to make sure you are giving yourself some computer time as well too. You have to make sure that you're structuring the loan file, make sure that you're staying on top of it and where it is. Maybe it's moved on past you and it's moved on to the processing and then underwriting, but you still want to stay up to date on what's going on in it so that you can relay and keep that good communication to your partners. So it's a little bit of both. I find myself loving my office time, but I also know I can't keep myself trapped in my office like every day. I've kind of worked out a schedule as I've gone along in my learning phases of my first 12 months, that I like my beginning of the week to be in the office and my end of the week to be in the office. That way that gives me sole focus time. And then midweek, I might take coffee dates or lunch dates or networking events, and kind of get out there midweek. But I make sure I kind of like bookend my week, that I started off, I know what's going on, and I end it off before my clients go out there and start putting offers in, and I make sure all my approvals are out, they're up to date, and etc. So that's how I
Makes
function.
sense. So schedule wise, you kind of time block things based on the time of the week and you try to keep that schedule so it flows together nicely and you stay productive, but you also get your back end work done. So deals are going through smoothly and you're maintaining those relationships that you're working hard to build in the front end.
Yeah, for sure. Yeah. Yeah, I do that. And then, it's not always perfect. Sometimes you might have a difference. Like this was past week, my Fridays that I usually would bookend and make sure that I do a little bit of office time, I had a couple closings, so I like to attend those as well when I can. And that changed up my schedule a little bit, so I had to readjust and maybe take some time later in the evening to do that, or if you're an early morning person, taking it early in the morning the next day and making sure I'm still getting to it.
That's awesome. Okay. So what are the from a realistic standpoint, a lot of people listen to this and they see the numbers, they see the money, all that kind of stuff. What can someone realistically expect from a stress perspective? Like how stressful is this business and what kind of things stress you out on a daily basis in this kind of industry?
It's definitely a lot. So I can't help but chuckle and laugh because it is a lot. You're constantly going. I think, especially, even though you might not be a self and, as a loan officer in mortgage companies, they all kind of function differently as far as like how you're paid, and et cetera. So you might not be an exact 1099 and have your own business, but you are generating your business and it is commission. So you kind of have to have that mindset of you're starting your own business. And the first 2 years, it's the grind of getting out there and keeping everything flowing and generating business and constantly growing. So it can be stressful. I mean, definitely my first couple months was like, well, I haven't stopped. It's Sunday. Oh, nope, next day's Monday. And because I was going into open houses on the weekends and then doing work events on weeknights as well too, and making sure I'm getting out there. So it can be, but after a few months of doing that, I took a step back and said, okay, I need to make sure that I still stay on top of myself and my own personal life, giving myself personal time, whatever that might be. If you're someone that likes to read, someone that likes to go for a walk, someone that likes to go to the gym, make sure that you're not losing track of that, because that has helped me manage my stress, because as a loan officer, you have multiple transactions going on in 1 month. And it can be stressful because you're like juggling a bunch of different things. But if you don't take time to step away from it and then breathe and give yourself like a reset time, it'll just bottle up and become very overwhelming. So it can be very stressful. How you manage it, find out what works for you, and give yourself a little reset time, whether it's something you need to do shorter periods every day or a longer reset time once a week, whatever that might be.
So it sounds like coming from a 9 to 5 and going into something like this is quite the adjustment at first.
It is, yeah. My 9 to 5 I had a long commute, so I was used to the longer days, but I had a little bit more like nighttime or weekend time free. And in this, I wanted to be available to my partners on the weekends to help them with an open house. And if there's an unrepresented buyer who's not pre-approved, we can just get it done right on the spot. So I definitely did, even though I was used to long days, this industry it's all the time, but it comes with flexibility. So it is a lot, it can seem like a lot more, but you have sometimes that you're able to start your day a little bit later if you wanted to, or take a step away midday because you are running your own business. So you might be able to do that. And you just have to learn to balance a little bit more.
That makes sense. So someone listening to this might be looking and saying, hey, I want to get out of my 9 to 5 job, but it sounds like I'm going to go into this and actually work more. So what's the upside to it? Like, what's the reason you left your 9 to 5 to go into something like this? Is there a financial incentive? Like, how much can loan officers actually make?
Yeah, it definitely can sound, I'm realizing that, yeah, it probably does sound like it's a lot more work, which can be a deterrent. And I don't mean to deter it from anybody, but if you want to do this successfully and get to the monetary amount that you see really kind of showcased and out there, which can be very good money. Like there's some loan officers out there that make more than doctors that did a 20-hour online course, and that's it. And they didn't go to 8 years of schooling for it. So it can be very profitable. So it comes with definitely some long hours of doing that. Why I chose to do it, even though it was going to be longer hours, was that I wanted that freedom to control my income. Not at that like above doctor level yet exactly, but I definitely wanted to be more in control of the money I made and also be a lot more a part of the real estate industry. I wanted to build my portfolio. I wanted to have investment properties, and take the money I was working really hard for and make it to be invested into something that's going to be passive and better for me longer term in my life. And getting into real estate was definitely something that I seen could get me there a lot better.
So the long-term plan is to kind of build this mortgage business, generate a lot of cash flow, and then take that cash flow, park it into assets that create that reoccurring revenue. So you can eventually get to that financial freedom number and kind of get back your time.
Yeah, exactly. Yeah. And I mean, in writing, doing loans, it is something that you can truly do from anywhere. I'm coming into my office now because I'm a new starting loan officer, and I like to have that support around me. I like to have the structure so that I can build a routine and consistency so that I can establish my business. But once my business is established and flowing and consistent at a decent pace, I'll have more flexibility. I'll be better at managing that volume. I'll be better at making things, delegating things out a little bit more, so I can have more freedom as well too. And then when I get into using my money and putting it into those other assets, I can be available to do them, whether it be on a rental property for something I own, or a flip, or other type of investment, and be flexible. So I'm doing it temporarily now, having the structure and setting the foundation to get the business, my own, business up and running and at a good base. But long term, it will be able to be something I can do remotely and flexible. And even if I get to the point of having those properties and still want to do some loans, I can do them from anywhere, truly. Once I've established it now in the first couple of years.
That's great. So from a income perspective, it sounds like the top producers are making extremely good money, six figures, sometimes multiple six figures. Um,
Can be.
what does an average loan officer do? Someone that just gets started, they're doing well, but they're kind of building up, doing their thing. How should people look at it from that perspective, just so they have a ballpark of what their first couple years might look like?
Yeah. I would say I think like when you Google the average loan officer does like 5 to 7 million in 1 year. That's your average, but then you have your top 100, Scotsman's guides, top 100 loan officers that are doing 40 million plus a year. So you can be anywhere from a beginning range of 5 to 7 million in 1 year, writing that. And then you can get to like the top 1%, which is anything that's 40 million plus in 1 year. So I would say that those are your established, doing really well loan officers. And then as a beginner, if you're doing, maybe you only did a couple million in your first year, but setting markers to double or to increase that as well. It's going to depend also to like the market right now. It's definitely, there's an inventory shortage. Buyers are very scared of rates, and not many people are actually going out and looking at houses as much. So it's all depending on where the market is as well. But I would probably say maybe an average to get started of like doing 8 million or 10 million is pretty average and pretty good. It's just under a million per month if you think about it that way. My initial marker was to get to a point where I was doing 1 million a month. That was my first like benchmark. And then moving on to 1.5 million a month, and then gradually maybe getting to 2 million a month. Then I know other fellow loan officers that are like, no, I want to get right to 3 million a month. Awesome. Like you just have to like figure out what your goal is and then what you need to do to get to that. It might be a little different. Like I'm going to be more referral based because I like to build relationships with partners and be more purchase transaction based versus just kind of cold call dialing. And so my route might be different from someone else's route as well too.
Okay, so just in case somebody doesn't know out there, when you say million per month, 2 million per month, what
Mhm.
does that equate to? I know it's based on percentages, but what does it equate to roughly, like a range as far as like income? Like what can they expect if they're doing a million? What can they expect if they're doing 3 million? Just a rough range. I know every office is going to be different.
Yeah, every office and every type of mortgage company or bank you work for, or if you're a broker, there's different levels. The average really is, so we get paid usually on what's called BIPs. It'll be 100 BIPs is like 1%, 50 BIPs is 0.5%, 200 BIPs might be 2%, if you want to give you a range in that. Usually your average loan officer is pretty standard. They getting like 100 BIPs is what I've seen as the average. So if you think we're doing a million a month, there's $10,000 in 1 month. There's a lot of other ways you break out the pie from that. So it definitely is going to be dependent on what type of company you're working for. Banks are a little different. You might get a base salary and then less BIPs, or you might be a broker and you might get a lot more BIPs, but there might be more payout to other resources that you need to do. So something that's right in the middle would probably be like 100 BIPs. So you're about 1%, and whatever you write, 1% of that. So if it's 1 million for that month, 10,000 for that month, it would be your commission.
That's great. So with a lot of hustle, a lot of effort, getting to that six-figure number is pretty realistic, it sounds like.
Yeah. If you get to that like 1 million a month, then you're hitting 120 million. No, yeah. Right.
120,000.
120,000. There you go.
Yeah,
Then you're like, 1 million a month, 12 million in a year, and then 120,000 for your take home commission.
that'd be great. That's awesome.
Yeah.
So that's really good. Now, going forward, like what are some of your goals? Like you've done excellent in your first 12 months, but what's your goal going forward, going into the next year? And how do you plan to get there?
Yeah. I tend to be more on the conservative side of things. I would love to say I'd get to the Scotsman Guide in like 2 years and get 40 million, but let's start off with like what I did do. My first 12 months was like assess what I can do. And I got to that 10 million in my first 12 months. So my next 12 months, I just want to double what I did. So as long as I'm kind of always doubling, I'm on trend to double what I've done in my first 12 months. My next 12 months is on trend to do that. So as long as I'm doubling in my production to get my long-term goal. Well, middle goal is to get to 25 million. And then long-term goal would love to be in the top 1%. But that's like 40 million. So we'll get there eventually.
Takes a little bit of time. That's good. That's really great.
Yeah.
So, just to touch on the investment piece, because I know a lot of people out there are wondering about that. You did buy a multifamily property, right, to start off with.
Yes.
Is that something that you would recommend to everybody, getting started with the real estate entrepreneurship space, if they're a loan officer, a realtor, anything along those lines?
Definitely. So speaking as far as like when you're already in the process of being in the industry, say you are an agent or you are a mortgage loan officer, it's definitely great to not only just be able to do those, like write the loans or close the deals of that real estate, but when you own it and you see how profitable it is and how much of an advantage it is, it does give you so much more of a leg up to speak to your clients as well too. So I think being in it and owning the property is really worth it. I would definitely say starting off with multifamilies is the best if you're a complete, for setting aside from being in the career. If you're just a homeowner and you want to get into investment properties, shoot for the stars and go for as many units as your lowest down payment programs will allow, which lowest down payment programs are going to be like your FHA or conventional first time home buyers, and you can go up to 4 units. So one thing I think, hindsight, I started off with only a 2 unit. I would have definitely started off higher and gone from like a 4 and then worked my way down to 3 and then to a 2 to maximize those loan down payment programs as much as possible. So I was using a little less money out of pocket. But I definitely think so. Like I would definitely start off with multifamilies for sure. It's very beneficial. And then once you're in the industry, having those properties and speaking on them to your clients and in the transaction gives a lot more confidence to you as well too.
So what's your favorite part about investment property? Is it the appreciation that you get from holding the property over a long period of time, or is it more the cash flow from the monthly rents that you get? What's your favorite part?
Hmm. As much as the instant gratification of the monthly revenue is great, I definitely lean more towards the long-term equity that you build. And you might not see it right away, but the value, like how much value and equity your house can generate from you just paying your monthly mortgage payment, and then values just going up in real estate. That difference of the equity. I mean, I've owned my home for 4 years, and just looking at it now, looking at like about $150,000 in equity in my home just from buying it. And all I did was buy it, rent it out. And there was times that I needed to use the monthly rental to pay for repairs or pay for other stuff. So I think that the monthly is nice, but the really big value in it comes with how much equity you can just gain without thinking about it. It's just like a little savings account that just grows that you don't even think about that exists. And I would have had to work years to be able to save up $150,000, and I did it in 4.
Yeah, it's amazing. And it's a giant leverage piece too. Like with stocks, you can't borrow the bank's money to go buy it. I mean, there's technically margin, but it's not the same thing. And it's not fixed debt, so there's a lot of pros to it, like you said. So I think that's awesome.
Yeah,
Now,
stocks you have to I was gonna say stocks you have to manage, you have to be in it and spend a lot of attention. You have to manage the property and make sure you take care of it. But that's normal property maintenance, not like really being a niche or studying it. I never had to like study and watch trades to be able to make that X amount of a return in the stock market. I just bought the house and maintained it and paid the mortgage, and in a few years I had over $100,000 in equity.
yeah, that's amazing. That's fantastic. So before we wrap up, give us a couple books that you really recommend for anybody looking to get started in business and real estate entrepreneurship, anything along those lines.
So my first one is going to be Sell or Be Sold by Grant Cardone. Coming from an educational more background, I did have sales in what I did and oversaw and stuff, but I definitely had more passion for educating. Sales scared me a bit, and I didn't think about it like it was a top skill that I had. It's not something I knew I was going to have to work on. And that book definitely changed my perspective of sales. And it's not necessarily so scary. It definitely took someone that cared more about education and made them realize that sales is a lot embedded in everything that we do day to day more than we really think about. So that was a great book. And the second one would be, I don't know the author, but I'll give the title at least. It's called Peaks and Valleys. It's a short, really short read, but I found that it's definitely been very helpful to keep me level-headed as everything you go through in life. There's ups and there's downs. And I think the best way to that book, it really explains how to manage both, to celebrate the highs and enjoy the peaks, and then assess and plan for the valleys and know that it's not the end of the world when the valleys come, but you'll get through them. And the more prepared you are for them, then the better you set up that you'll be to stay consistent. And our industry definitely goes through ups and downs. So that book has been great to keep me like level.
Okay, that sounds excellent. So yeah, reading is really important. Anybody that's getting involved with this industry, I feel they need to really sharpen their mind because it's not easy. There's a lot of ups and downs to it. So reading, becoming sharp, doing all that is only going to increase your income, especially when your income is something that you can, control and have an impact on. So those are great recommendations. So, Amanda, thank you for coming on the show. I really appreciate it. And I wish you nothing but more success.
Thank you so much. I had enjoyed it. I had a great time. So thank you for having me.
Awesome. Thank you. Hi, my name is Chris with the Empire Real Estate YouTube channel. On this channel, we talk about real estate entrepreneurship and building your real estate empire. If you like that kind of content, smash the like button and subscribe. If you did enjoy the podcast, make sure to check out our entire playlist from the Coffee with Closers podcast, where you can see all the episodes we've done so far. I hope you enjoy it.